Good evening, ladies and gentlemen. I am Vidya Lesta from Benham and Reeves, Hong Kong, and I'm pleased to welcome all of you this evening. I have recently joined Benham and Reeves as the director head of the Hong Kong office after a decade-long career at JLL, overseeing the international residential business in Southeast Asia. Today, I am honored to be hosting a panel of industry experts who had prepared interesting contents for you. I am pleased to introduce our established speakers for today. Our first speaker will be Mr. Simon Denton, who has over 28 years and experience and expertise in the international tax planning, trustee, corporate services, fiducial, and market entry industry. Simon joined the HQ of Sovereign in 1990 as an MD of Sovereign Trust in Gibraltar. He served 2 terms as the chairman of the Association of Trust and Company Managers and was a member of Gibraltar Government Financial Sector Legislation Committee. Moving to London in 1996 to establish the Sovereign's UK subsidiaries, he continues to be the managing directors of these 2 companies. Simon has been a director of the Royal Society of Fellows, continues to be a member of the Institution of Management, is the founder and chairman of International Professionals Association Limited, and a regular lecturer and speaker at tax planning and financial services conventions throughout the world. Our second speaker is Marian Jankov, who I would like to extend a warm welcome to Hong Kong. He has now been with Capricorn for over 4 years and has constantly maintained the highest standard of mortgage and protection advice to his clients. Having a significant number of clients based in various parts of the world, Marian is a fully qualified mortgage advisor and the head of Capricorn Financial in Hong Kong. He has supported and presented at large property events in Singapore, Hong Kong, Dubai, and London. And I'm sure he will be happy to meet with our Hong Kong buyers in person when he is out of quarantine. Our final speaker of the day is Miss Lucy Darby. Lucy moved to Birmingham when she joined St. Joseph in 2017 as a sales manager for Snow Hill Wharf, following a successful real estate career in London. Lucy is attracted to the fast-changing landscape in Birmingham and is passionate in finding the perfect home for owner-occupiers and investors alike. For the agenda of the day, Lucy will be covering Birmingham's property market and why it is a top investment hotspot where property prices are amongst the fastest growing in the UK. If you can go on to the next slide, I'll be covering what is going to be presented today. So yes, as you know, Birmingham is forecasted to see the strongest house price and rental value growth over the next 5 years. We will also share with you an opportunity with great potential returns, Snow Hill Wharf by St. Joseph, which is our spotlight development in the month of April. Going on to the next slide. I know that all of you are excited to learn more about this much talked property hotspot, but before that, I thought it would be good for us to first set the landscape right on topics that are also as important, if not more, if you're looking to buy in the UK. As part of this presentation, we will also share some practical tax solutions for Hong Kong investors looking to purchase a UK lifestyle or buy-to-let property by Sovereign UK. We also have Capricorn financial consultant Marian to discuss financial options for you to consider. I will be facilitating the Q&A session at the end of the presentation, so please don't forget to submit your questions to our panelists in the Q&A chat box below. So without further ado, let me introduce our first presenter, Mr. Simon Denton, the Managing Director of Sovereign UK. Simon.
Thank you very much, Widya. Can I be taken off video, please? Right, good. I think I can be seen. Very, very good morning to you all, and good afternoon, good evening, Hong Kong. And may I start with the third greeting of the new year. It's Happy New Year from the UK. We've had the normal New Year, a Chinese New Year, and today is the first day of the financial New Year, which can be quite significant as I canter you through some introductory slides, especially on the immigration and taxation. Thank you, Whittier, Mark from Benham and Reeves for putting together this excellent presentation, excellent talk, webinar, and I would like to offer a warm welcome to my fellow speakers. Today, I'll be discussing exactly what's written on the first slide there, with especially a practical focus on how to purchase a main lifestyle property, that's main or secondary residence, and contrasting that with how to use arrangements to invest in buy-to-let residential property. Supporting myself is a colleague of mine in the UK who worked in Hong Kong, is Stuart Stobie, and Winnie, who also assisted in this presentation, who's very much part of our headquarters in central Hong Kong. Next slide, please. Just walking you through here with what I'm going to cover. Part one is a focus on buying property to enjoy personally a main or secondary residence, but giving you a quick update on the UK taxation landscape, specifically for non-domiciled persons. That's non-British persons, someone that's not like myself. Very important is the UK visa for Hong Kong citizens effective January 2021, and why that is even better than the residency rights that were once afforded to EU nationals before we left officially the EU as of the 1st of January or 31st December last year. When to use, how to buy property individually, and possibly when to use overseas trusts. Moving to part two, moving away from residential personal property ownership, main residence, is the exciting element of buy-to-let residential real estate, investing in rental property, when to use a UK company, when to use just your own name or a joint spousal purchase, husband and wife, family purchase, and when to use overseas structures, a company and trust. Depends on the threshold of the purchase, but I'm going to encapsulate all of those attributes in my sort of less than 15-minute presentation. So better go on to the next slide, please. Right, there can be hours and hours spent on domicile, which can be quite boring, but I'm just going to give you the highlights of a person or person's family that may wish to invest and or live in the UK, but because they are not born British and because they are not from this country, they have a distinct advantage of being non-domiciled of the UK. There's two tax systems in the UK, one for me, unfortunately, because I'm taxed on my worldwide income as a British person and resident, and another tax system if you are non-UK domiciled, especially if you want to come and live in the UK. And domicile is quite easy to work out if it's quite evidential in where, in who and where you are from. Your country of birth, your current permanent home, where your parents were born, where you've had your substantial social and economic ties, the main country of your education or your children's education and your children's education, and where you've resided or where you wish to return to. So for those listeners and delegates from Hong Kong, it may be evidential that those questions mean that the answers to those questions are one of Hong Kong domicile, and because you can only have one domicile, you may have the advantage of being not Hong Kong domiciled, non-UK domiciled, and wishing to invest or move or both to the UK. You are not taxed on your overseas income when you move to the UK. So overseas income, overseas dividends, overseas gains are not taxed in the UK unless the overseas income is remitted to the UK, and that can last for up to 7 years out of 9. You can enjoy that status up to 15 years by paying a tax charge of £30,000, which rises to £60,000 in 13 years. So that's the landscape just briefly explained in regard to the advantages of a person seeking to invest in UK real estate or just any UK investment and or wishing to relocate to the UK, which is rather complementary to the next slide, which is in regard to being able to live in the UK as a Hong Kong citizen. Next slide, please. Right, you've got some Chinese explanations there, but the UK government, Her Majesty's Home Office, Minister of the Interior, was able to pass legislation last year, effective January 2021, only just a few months ago, applicable to Hong Kong nationals, British national overseas holders of passports, being able for them and their close family members to enjoy a UK visa, which is friendly, flexible, not onerous. You can apply inside or outside the UK. You can enjoy the permission to be able to reside in the UK for 30 months and then extend that for up to 5 years, after which you should enjoy indefinite leave to remain, and from the 6th year, the right to apply for a passport. But this visa allows you to work, study, retire, remain, live, and have the same rights as any British person, but still enjoy non-UK domiciled status. And it's a status that's even better than the EU nationals that used to enjoy residing automatically in the UK up to the 31st December. So well done, UK Home Office, for rightly so seeking to attract and to encourage Hong Kong citizens having the right to relocate and reside in the UK. So next slide, please. This is a property presentation. I'm just teeing up my fellow presenters that will talk to you more specifically on property. But everyone's got to look at the purchase taxes in terms of what taxation rates will apply: stamp duty, land tax, the purchase tax for a person, a corporate, a trust owning or purchasing a property. You've got the graduated rates, so I'll use this as a slide, a reference slide. You've got the graduated rates, and there was a question by a Hong Kong person, just came in prior to this, the start of this this talk, and it's important you read the second bullet point. A tax surcharge of 3% is payable if the residential property is not classified as a main residence. So if you've sold your main residence and are about to sold your Hong Kong main residence and about to buy another residence but in the UK, and that will be your main residence, the surcharge shouldn't apply, especially if you buy it in your own name. There's a stamp duty holiday extended because of COVID and trying to kickstart the economy up until the 30th of September, but that applies for properties up to 250,000, and the graduated rates apply thereafter. Again, this presentation, like everyone else's, is going to be circulated, provoking hopefully questions online today and questions offline. Next slide, please. A little bit of an intro to, again, the tax climate. If you're going to buy a property that you are going to enjoy yourself, whether it's one day or forever or for the entirety of the year, don't buy it in a UK company or an overseas company, ladies and gentlemen, because in 2013, there's an annual tax charge. So only use a company for a buy-to-let residential property or a commercial property or development. That tax was introduced in 2013. Non-resident capital gains tax was introduced in 2015. So whether you're Hong Kong resident, Malaysian resident, Singapore resident, or UK resident, capital gains tax will apply. Individuals paying 28% on the net gain and companies paying 19%. any company that buys property and which is owned by Whittier and Simon, for example, UK IHT will apply come the demise of one of the shareholders. Unfortunately, inheritance tax applies at 40%, the worst tax on the planet, ladies and gentlemen, much worse than the US, because the threshold for estate duty in the US starts at 11.5 million, whereas in the UK it's only 325,000. So be careful on inheritance tax considerations, because regardless of where you live, Hong Kong, Malaysia, wherever, regardless of where you were born, UK or non-UK, IHT applies because the property is located in the UK. So inheritance tax is an issue which we can debate offline how to navigate around it. If you're buying in your own name, make sure you try and buy with a mortgage, you take out a will, and you consider assessing your life insurance, and I can do all of that, and Capricorn Financial can deliver rather smartly on the mortgage finance. So wills, finance, life insurance for personal purchases. Next slide, please. Right, illustration one. Buying a main residence or a secondary residence, a property not to be rented to third parties, whether it's the main residence, a second residence, a trophy property, or just a lifestyle property, the applicability is the threshold should be at least £1 million, if not, buy it in your own name, with wills, with finance and life insurance. This is a superior type of structure for plus 1 million, usually nearer to 2 would be better. And let me just canter you through the salient benefits. You're not buying in your own name, you're buying through an overseas trust. The settlor, the person that creates the trust, should be not British. The trustees, for example, sovereign, should not be British, resident or registered. The beneficiaries could be the family, including the head of family, so spouse and children. And it's the trustees that buy the property with or without finance. And the benefits in the left-hand corner, ladies and gentlemen, no tax charge when funds are contributed to the trust, because the person making the contribution is not UK domiciled. There's no annual tax charge because a trust is not a company. There's not even capital gains tax if the beneficiary or one of the beneficiaries can live in the property for 90 nights a year, which usually is a pretty simple assessment to make. You're either living there or you're not. No inheritance tax at all on the settlor, unfortunately suffering an untimely demise, and no inheritance tax on any of the beneficiaries suffering an untimely demise. So it is purely one of the major, not purely, but one of the main elements and attributes of this arrangement. Trusts never die. Unfortunately, people do, and UK IHT is avoided. And that makes that illustration rather complementary to defeating and navigating away from UK inheritance tax. Next slide, please. Thank you. Reference slide. Buying a property, part 2, buying a property for a buy-to-let investment, not to occupy yourself personally. Try not to use a main residence and secondary residence like I've debated already, and then look at a buy-to-let investment opportunity on the basis that the property is going to be occupied by third parties exclusively for those persons. If not, you're going to get that 8 annual charge. There is the possibility to use a UK company as opposed to an overseas company. You may get preferential mortgage rates, and it's going to be less expensive to set up a UK company than an overseas company. Regardless of whether it's a UK or overseas company, net rental income will be subject to 19%, but companies are able to deduct mortgage finance in its entirety, whereas private landlords are only able to deduct 20% of the mortgage interest against net rental income. So clearly HMRC and Her Majesty's government, rightly or wrongly, favour corporate landlords as opposed to private landlords. IHT will still apply if Mr. and Mrs. both spouses, both partners own the shares. So make a will, buy through mortgage finance, and look at life insurance. Overseas companies, case by case, if they're owned by a trust or a pension scheme, no IHT will apply. Next slide, please. So, illustration 2, a buy-to-let residential real estate, lower threshold of property, 65 plus, possibly 75% mortgage finance might be available, especially through the expertise of Capricorn. Mum and dad, business partner, sole owner if you want to, owning the UK company buys real estate, mortgage finance granted. You may want to look at wills and life insurance complementing this corporate purchase. No tax going in as loan and share capital. No annual tax charge, ladies and gentlemen. Of course, the company is going to buy property exclusively for rental purposes. Net rental income only subject to 19% tax, just a couple of digits higher than the Hong Kong, so not dramatically higher, similar to Singapore. So it's a reasonably low rate at the moment. Full deductibility of mortgage interest. Any sales generated for the sale of real estate, 19% corporation tax, not 28. But again, look at wills and life insurance to knock away that inheritance tax consequence. Next slide, please. Slightly more sophisticated slide. This will be for a property investment portfolio, one or more properties, ladies and gentlemen, of at least 1 million. Optional mortgage finance, probably 65% loan to value, not any more than that. So you may get more through a UK company than an overseas company. But the more sophisticated arrangement on this slide is to defeat and eliminate, negate UK inheritance tax on the demise of the head of family, their spouse, and unfortunately, God forbid, their children. So we're using a rental in UK property investments purely for rental return, owned by an overseas company, not a UK company, and having the overseas company owned by a trust. The head of family contributes the deposit or the entirety of the purchase price into the trust. The trust sets up the company buys the property, which is rented out with optional mortgage finance. No tax going in, no annual tax on the ATED because the property is let and rented, or the portfolio is rented to third parties, not to the family. Net rental income after mortgage deductibility is 19%. Any sales is taxed at 90% only on the gain, and no inheritance tax, ladies and gentlemen, come the demise of the person that set up the trust on the basis that they're non-domiciled. So case by case, you would look at that, that slide. Next slide, please. I'll leave you with this because on the left-hand side, just as a reference document, you've got the type of a property asset, main residence, or buy-to-let, or property development, or even a UK commercial property, be it a warehouse, an office block, a hotel. You've got non-domiciled persons on the left, and moving across the right, UK domiciled. So that just gives you an illustration or a reference document as what to use, what to do, what are the alternatives involving various assets to purchase. And again, case by case, will give you some information, advice, costs without obligation, and again, on a case by case basis. Next slide. I think I'm more or less on time as I tee up the next person. Next slide, please. Right, so hopefully that will be useful. I'm going to hand over to Marion from Capricorn Financial, being entirely complimentary to what I've said so far. And there'll be plenty of questions, plenty of time for questions and answers towards the end of the seminar. Thank you very much. Marion, or Whittier, then Marion.
Hello, hello. I hope you can all hear me. Thank you, Simon. That was very good and a very nice liaison into what I'm going to talk about. Now, of course, you all want to hear about UK mortgages for home ownership and buy-to-let. Obviously, they're two different things, so I'd like to explain a little bit more about that. Obviously, any questions, we can discuss that in the end, online or offline. Next slide, please, Nick. There we go. So who are we? Just a quick introduction. So we opened in 2005 and we're now the largest independent mortgage brokerage in London. We have offices in Singapore that's been running for about 2 years now, and Hong Kong as of hopefully next month, simply because I'm now in quarantine for 21 days. That'll be fun. And we are experts in the new build market. We've worked with a large number of the largest developers in the UK. And we do a lot of specialist financing, meaning we've got 3 teams. We've got Capricorn International looking after any clients based overseas, just like most of you guys in Hong Kong. And we've got the private clients looking after high net worth individuals or loans above one or £1.5 million. And Capricorn Commercial, of course, that's to do with any sort of commercial lending or more specialist lending. Now, we work with more than 300 estate agencies and developers overseas, globally in the UK and internationally. And we're the whole of market mortgage brokerage, meaning we can look at all the banks available on the UK market. And we are regulated by the Financial Conduct Authority, which you'll be glad to hear. Next slide, please. Yep, that's just us. Obviously, a bit of boasting. We've got almost, I think it's 5 stars now from about 700 reviews, which is nice. Next slide, please. The product wheel. I'll skip through this very quickly because it's just a nice and colourful view of what banks we work with. But as I said, it's whole of market, so we cannot fit them all on one sheet. But you can see some of the big players in there, like HSBC, Barclays, and those are kind of the high street ones. On the bottom left, we've got the likes of, Skipton International, Gatehouse, Bank of China, of course, some of those you would have heard of, some of those you would not have heard of. But again, we'll look at everyone for you and we can simply just pick, the best one and advise who to go with, given your circumstances, of course. Next slide, please. Right, the market summary. So at the moment, as you all know, the rates are still very low from the Bank of England. These are 0.1 at the moment. There are talks of negative rates. We don't know how that's going to go. Hopefully that would mean cheaper mortgages. But each lender decides what margin above the Bank of England they will price their product at. There's a stamp duty holiday, of course. Simon is the one that's an expert on that. He touched upon that very quickly. But of course, any questions around stamp duty, ask him. There have been some delays in processing and surveys. Some banks have been a bit slower due to COVID, due to obviously surveyors not being available in areas and having to visit properties in person. And of course, that has caused some delays. But again, banks are starting to get back to normal. Current lender appetite, of course, lenders want to lend. Generally, that's how they make their money. Of course, mainly areas that are kind of very, very should I say popular are London. Obviously Birmingham and Manchester now are becoming more popular, so there's more and more lenders looking at those areas because big developers such as St. Joseph from Barclay Group are looking at these markets. So values are good, rentals are good, so why not? And there's new lenders entering in the market, so they obviously want to get in those areas and make some money and lend to overseas investors because there's interest, of course. And there's loads of options available out there. I mean, from about 200 banks that we work with, obviously some more expensive, some cheaper, some more specialist, some more high street. But we do get some exclusive products, which is nice, simply because of the size of Capricorn. We do often get very good relationships with the banks, which means we can get exclusive products just for us. Next slide, please. Right, lending policy and features. Again, this is very, very difficult to do in about 10 minutes and talk to you about it, but obviously it depends on each person's situation. Now, income requirements is one. Obviously, you need to have some sort of an income to achieve the better rates. The cheaper banks generally want you to be earning good money. Of course, it's less risk for them when a client is earning well. Potentially up to 80% loan to value available. Of course, on a residential, that's more achievable. On a buy to let, that becomes a little bit more difficult because of the rental stress tests that banks implement to calculate the maximum borrowing. And of course, the higher the loan to value, the higher the rate. And I'll explain that later. You can remortgage and refinance to capital raise. So if you already have a portfolio or a property in the UK which has low or no mortgage on it, you can borrow more on top to buy another property and put that down as a deposit. There's plenty of good options for that. And we can do as well guarantor mortgages or third-party mortgages, again, where, let's say you've got two applicants, but only one of them will be an owner of the property. And the only reason you have two applicants is simply to support, for example, income requirements or some sort of criteria that the bank needs to cover off. Again, that's not available to everyone. It's very subjective. And rental income stress tests. Now, these are very important for buy-to-let properties because each bank implements their own stress test, which determines the maximum loan. Now, of course, that's a bit more complicated to explain to you now in this presentation, but I can explain to you on a one-to-one conversation later on. Next slide, please. Terms, rates and fees. Now, I did see a few questions come through. Mainly, I hope to answer them in this kind of slideshow. But generally, the buy-to-let interest rates could be anything between 2% and 4.5%, more or less. As I mentioned earlier, the higher the deposit, the easier the situation of the client. The more the vanilla of a kind of case it is, the better. So it means you can go to the high street banks. You hear the likes of HSBC offering 2 and a bit. Of course, they do offer that, but they have a lot of criteria and a lot of things that need to fit before they can offer that. So generally speaking, you can go up to 4.5% if you're looking to borrow the maximum loan to value, or your income is not high enough, or it's your first ever purchase or something like that. Obviously, again, we'll touch upon that later. Residential mortgages could be around 1.5% to 2%, a tiny bit cheaper. But of course, we need to establish what you want that property, what's going to happen with that property on completion. So if you want to let the property out initially when it's ready, when you receive the keys, and you want to rent it out to the open market, that's a buy-to-let property. That does not mean you can't change that later down the line, because you can refinance, you can get rid of this loan, and it can be underwritten for another residential loan. Obviously, the regulation for residential and buy-to-let are different. Residential is very heavily dependent on your income and how you're going to obviously support the property. Buy-to-let is down to the rental of the property, simply because that's what's going to be covering the monthly mortgage payments. And you can kind of understand why that is. So as I said, there's more products and lower rates with the higher deposits. So if you have 30, 40, 50% deposit, it all becomes a little bit easier. Lender arrangement fee, so that's a one-off fee payable to the bank, which is usually could be zero. Again, that generally means higher rate, or it could be 1.5%, which is quite standard across the board. That can be added to the loan if you don't want to pay it up front. Loan tenure is, you can do up to 25, 30 years, depending on the bank. And you can do interest only lending as well. And the rates are the same, whether it's a repayment mortgage or interest only. The bank's also the same. It's a very popular buy-to-let product going for, or repayment method, should I say, going for interest only. Next slide, please. Lending to corporate structures. Simon touched upon that very briefly, but more and more people are going for this company ownership, and that's simply due to tax purposes. Not all banks lend to companies or trusts. You should know that for sure. There's more specialist banks and more kind of commercial orientated banks that would typically lend to UK limited companies. So ideally you have the UK set up, the company set up in the UK. Of course, that's not the most difficult thing, but there are obviously companies who could help you out with that. And you can consider like BVI or Singapore companies and trusts. Of course, different lenders would be considered in that case. And shareholders and directors are usually needed to provide personal guarantees, of course. And the legal process might be a bit longer. And of course, as you can imagine, due to that, the complications, the rates and the banks might be slightly higher, of course, probably around 4 to 4.5 to 5%, depending on the client's situation. Next slide, please. When to remortgage, I'm not going to worry too much about that. But basically, if you're ending your initial period with your bank, you have a tie-in period with each bank, which is usually 3, 4, 5 years, something like that. At the end, they allow you to look at the market again and change for a better rate if one is available, or if you want to borrow more money or borrow less or pay off something. Basically, change anything in the ownership or anything in the kind of finance of the property. You do that when you remortgage and refinance. Some lenders offer cheaper rates for remortgaging because it's not a purchase. The legal process is quicker and you've already had a track record of a mortgage on that property. And of course, we offer free consultation on without any upfront fee, so we can look at that for you. Next slide, please. Application process. Now, again, I saw another question in there. This little slide might be a bit more complicated, but it's very, very simple. We sit down, hopefully in person very soon, and we go through your situation, financial, personal, everything that I need to know, that the bank may need to know. We'll then establish what banks are best for you and what rates are available to you, so you can say whether you're happy or not. Obviously, we've got access to everyone, so I'm sure the rates will be the best ones out there. And usually we'll get you an agreement in principle, which means the bank knows about you. They get a bit of information about you and they say, in principle, we can lend to this person. So usually that takes about 24 to 48 hours. Again, some banks are very old school and it's all paper-based, so we'll see about that. And once obviously that's all done and we have a property there, you have purchased the property, we'll start the application process and all the documentation will be sent to me. I'll then do the initial kind of filtering and underwriting, and we'll go to the bank and start the underwriting process there. Now, survey will be instructed to go and visit the property. Obviously, that means usually paying a valuation fee. And then it takes about 4 to 6 weeks for underwriting, again, depending on the bank and the situation of the client, to get the mortgage offer out. Now, that means you've been underwritten, the property's fine, and everything has gone absolutely fine without any issues. Mortgage offers are valid for 3 to 6 months, usually 6 months, let's say, which means we need to start the process about 6 months before legal completion of the property or the estimated completion, just to allow for some delays or unforeseen circumstances. And then, usually solicitor will take another 3-4 weeks to get things done on the legal side of things. But yeah, generally, I'd say 2 to 3 months for the mortgage process application and an offer to be issued by the bank. Next slide, please. Worked examples. I'm going to breeze through this, but this is a real example, of course, from a bank. I wanted to use that because it starts with high rates. And I'll tell you why it starts with high rates. It starts with high rates because we're looking at a buy-to-let property, which is worth £260,000. Borrowing is £195,000, and the estimated rental is £1,050. Now, if you fix for 5 years at 75%, that's very, very high kind of loan to value. 5-year rates will allow for 75% because they have easier stress tests. Because of the easier stress test, it means the rate will be slightly higher. Now, monthly payments will come out to be about £810 on interest only, or £1,140 on repayment. So you can see the rental will generally cover both fairly nicely, apart from obviously a tiny bit on the repayment. We only charge a fee of £1,500, which is once the mortgage offer and the bank has been kind of happy with everything and has issued it. But that's kind of a higher rate simply because we're looking at 75% buy to let and the borrowing is £195,000. Some banks have higher rates for lower borrowing amounts, or below 200,000. You might find that some banks are a bit more, they price their products a bit higher. Now, if you provide a bit more deposit at 35%, and we keep everything kind of similar, you can get a 3-year tracker rate at 4.24%. So you can see slowly everything is going down. Of course, that doesn't mean that's going to be the rate for you. It might be cheaper, might be more expensive, but this bank is very good to show you what the difference is. Again, monthly payments would come out to be £600 on interest only, which is pretty good monthly commitment, given that you'll be getting £1,000 rental. Next slide, please. Now, here we go. We've got a slightly more expensive property, 342,500 and 75% again. So the highest loan to value you can do. Now, because the borrowing is slightly higher, it's at 256,000. Your rate at 5-year fixed is becoming 3.74. So you can see about 1% or more than 1% lower. So much nicer. Monthly payments again around £800. So for interest only. So again, you can see the more you borrow, kind of the cheaper it is, but the loan to value still is very important. So if you look on the right, you've got a 3-year tracker at 62% loan to value, which means 130 grand deposit. You are looking at around £528. So the 3-year tracker now goes into the twos. So 2.99, much nicer. About 60% loan to value. Happy days. You've got about 40% equity in the property, so the bank is quite happy to give you those 2 and a bit percent rates. Next slide, please. So we've got obviously our CRM, which is very, very useful. Once we kind of do the initial talk and you sign up and do the fact find on here, you have access to it. You have logins, which means you can easily go in and check the the process of your application and what's going on, and you can track even the portfolio that you've input and track the value of it. And there's many cool features about it, but you have access as a portal for yourself on our Smarter 365. And I think, next slide, please. I think that's it. So I'll pass you on to Lucy. Any questions, feel free to give me a shout. But Lucy will talk to you about Snow Hill Wharf, and she's from St. Joseph at Berkeley Group. So you'll need to know a bit more about the development itself. Thank you.
Thank you, Marion. Hi, everybody. As mentioned, I'm Lucy Darby, Sales Manager at St. Joseph. For those of you that aren't familiar with St. Joseph, we are the 6th operating company of Berkeley Homes and the first operating company to step outside of London and the south of the UK. Berkeley Homes, you may be familiar with, a FTSE 100 company who have been developing over 45 years. St. Joseph have been operational in Birmingham for about 5 years. I've been with the company for around 4 of those, and Snow Hill Wharf is the first of many developments for us within the city and across the wider West Midlands. Birmingham is one of the fastest growing cities in the UK and is receiving a huge amount of investment at the moment. Today, I'm going to run you through a few of the reasons why it's such an exciting city. I'll then go on to talk to you about what that means for the market, and lastly, look at Snow Hill Wharf in a bit more detail. Next slide, please. First, here's an aerial image of the city and where Snow Hill Wharf sits within it. This image has changed a phenomenal amount over the past 10 years. Snow Hill Wharf sits in Zone 1 Birmingham, very close proximity to the 3 business hubs, Colmore Business District, Brindley Place and Paradise Circus, making it a fantastic rental opportunity, as well as being a fantastic lifestyle offering with all of Birmingham's attractions quite literally on your doorstep. Next slide, please. So let's have a look at a few of the reasons why it is such an exciting city and expanding at such a rate. Next slide, please. Number 1, transport. The city is incredibly well connected and therefore great for business. Trains, home to 3 stations at present, all of which are between a 6 to 17-minute walk from Snow Hill Wharf. London can be reached via a 1-hour, 20-minute train journey at present. Soon to be 4 stations with the arrival of HS2, which will be a 20-minute walk or a 6-minute tram ride away from Snow Hill Wharf, and that will reduce travel time to under 50 minutes to London. We've got an incredible tram network to connect you around the city and beyond, and there's a tram stop only 1-minute walk away from the development. Airport, we have Birmingham International Airport, only a 9-minute train journey away, so you can be door to door Snow Hill Wharf to being on a plane in under 30 minutes. Motorway connections, we have the M6. This is only a 5-minute drive away from the development, which offers good road connections to the north and south of the UK. And also cycle routes. We've got fantastic and improving cycle routes to connect you around the city and beyond. Next slide, please. Birmingham has and continues to receive a huge amount of inward investment, both domestic and foreign. We are host to the 2022 Commonwealth Games, a £218 million event, creating 4,500 additional jobs and will attract up to 1 million visitors from across the world. Paradise Circus is a £700 million development, which is a newly created commercial hub, home to a number of large businesses. New Street Station, which is Birmingham's main train station, underwent a £600 million redevelopment and is now a destination for evenings out with bars, restaurants, shops, the like. It is the busiest station outside of London, which is only set to increase as population of the city continues to do so. Birmingham International Airport underwent a £300 million expansion, now with 50 airlines flying to 150 destinations. HS2, I've already touched on it. I feel like I'll touch on it quite a bit throughout the presentation, and it's worth every mention. A £17 billion development with first train set to leave in 2033. And lastly, the Big City Plan. So the Big City Plan is a 20-year city centre master plan, in essence, transforming Birmingham into a world-class city. We'll be creating 50,000 new jobs and will help contribute £2.1 billion to the economy every year. So all of this money being spent on improving the city shows real confidence in the future growth. Commercial relocations and company expansions. Oh, sorry, next slide, please. Commercial relocations and company expansions is a great indicator for how well the city is performing and the future confidence in the city. So Birmingham's actually seen the highest growth in wages within the UK over the last 5 years. This is driven by so many large companies relocating, mostly from London, and creating more well-paid jobs. So a quick glance at the key commercial hubs and just a few of the key businesses within them. You have the Colmore Business District. This is a 6-minute walk away from Snow Hill Wharf, home to the likes of BT with 4,000 staff, KPMG. So this is the largest firm outside of London with circa 1,300 staff and more than 45 partners. You have Brindley Place, which is a 20-minute walk from the development, home to the likes of Deutsche Bank with around 1,000 staff. They actually relocated from London in 2007 and since then has seen a 150% increase in profits, and also home to the likes of Deloitte with 750 staff. And last but not least, you have Paradise Circus, which is this newly created commercial hub, only a 15-minute walk from the development and home to the likes of HSBC's newly relocated HQ from London with over 2,000 staff, and PwC's newly relocated HQ with 2,400 staff. Next slide, please. We have been voted the best regional city for quality of life, making it an attractive city for people to relocate to. I can vouch for it. I've lived in London for a number of years. I have also studied and lived in Manchester for a number of years. I now work and live in the city centre, and you can truly live that city centre lifestyle. We're one of the greenest cities in the UK. We are in the top 3 most visited cities for shopping in the UK and actually home to the largest city centre shopping centre within the UK. We have fantastic education offering, home to 5 universities with a 20% student base, 2 of which are only a 10-minute walk from Snow Hill Wharf, being Aston University and Birmingham City University. And we have a great culinary offering. So we're actually home to the most Michelin-starred restaurants outside of London. Next slide, please. So what does all of this mean for the property market? Next slide, please. So this graph is taken from Land Registry. It shows that Birmingham has been experiencing a steep and steady increase in house prices over the past 5 years. And will continue to do so as more people relocate to the city, more businesses relocate to the city or expand, and the city continues to grow and expand outwards. So over the past 5 years, this graph shows that there has been an average house price growth of approximately 20%. Rental prices have also grown almost the same rate of 16% over the last 5 years. Next slide, please. So that's looking at the past 5 years. Now, what does the future look like for house price growth within the city? Next slide, please. So according to JLL's November 2020 report, Birmingham is set to see the strongest house price and strongest rental value growth over the next 5 years compared to the rest of the UK. So with year-on-year growth expected from 2022 to 2025, as seen in the table here. Therefore, buying today will be the lowest price it will be within the city. The best located properties and homes built to the best standard will experience the best growth as demand for good quality city living is on the rise. Next slide, please. So finally, on to Snow Hill Wharf. So Snow Hill Wharf is truly raising the bar for luxury city centre living and will appeal to the wave of residents relocating from London and the like. St. Joseph are passionate about changing the skyline of the city like we did so successfully in London. Snow Hill Wharf, being located Zone 1, Birmingham, will continue to benefit from great capital growth as the city continues to expand outwards. Next slide, please. So here's a quick site plan of the development. In total, there are 420 units divided over these 5 buildings here. It's actually a gated development, which is great because you are so close to the city centre. So from a safety, security, privacy point of view, it's fantastic. The 5 buildings are connected via 3 gardens, and the whole rear of the development stretches along the canal, highlighted in the gold colour that you can see there. So there's a 163-metre stretch with apartments offering either views of gardens and the canal or actually south and towards the city. Resident facilities are located in the Faisley building, and we have completion dates ranging from Q2 of this year, Q2 21, and they are within the Barker building, so working from right to left of the site plan. And last completions at the development are Q3 to Q4 of 2022, so next year, and they are in the Colmore building, so far left of the site plan. Next slide, please. So we are the first development within the city to offer hotel luxury facilities. Snow Hill Wharf is very typical to what Barclay deliver in London and is designed to support busy lifestyles. Facilities include a 24-hour concierge to help with anything from deliveries to restaurant bookings. We have a 12-seater cinema room equipped with drinks fridges. We have a residence lounge area, gym, sauna and steam room with changing rooms to both, along with bookable conference room and meeting pods. Next slide, please. And in addition to that, the development also offers 3 beautifully landscaped resident-only gardens, which really offer a bit of an oasis of escape from a busy city life, because you are literally on the doorstep of the city, but it does feel like an absolute escape when you are within the gardens of the development. Next slide, please. So moving on to the internals of the apartment. So we've used our experience in London to influence the interiors of the apartments. Luxuriously appointed living areas designed to maximise space and light, whilst generous balconies or terraces afford fantastic views. The quality of the craftsmanship and finish is second to none. Every fitting has been selected by interior design experts. And actually you have some really lovely unique features such as this brush black detailing in the bathroom and dark bronze ironmongery throughout the apartments. All apartments come with state-of-the-art appliances and are even fitted with wardrobes to bed 1, offering a real stress-free investment. Next slide. Thank you. But very different to Zone 1 London, we have prices within the development starting from as little as 245,000 for a 1-bedroom apartment, example on the left there, offering a balcony overlooking the gardens, or only £315,000 for a 2-bedroom apartment, again with balcony. This particular apartment offers views towards the city and the south. So just having a look at a bit more detail, if we could go on to the next slide, please. So we've got a great mix of 1, 2 and 3-bedroom apartments throughout the development. I've just chosen 2 example properties just to give you an idea of the offering. So here's a 1-bed example unit for investment, B504. It sits within the Regent building, which is a 21-storey building. You can see the floor plan on the left and the view which you would have from the balcony of this exact unit on the right-hand side. So this unit would offer just under a 5% yield at the asking price. Your rental market, definitely high profile business professional, likely working Monday to Friday in the city, possibly even traveling home at the weekends and therefore not requiring a huge amount of space. Or a single business professional, likely having possibly relocated from London or elsewhere in the UK with one of the major company relocations. This unit benefits from garden and canal views, and you can even see the city just above the Colmore building opposite. You're also southwest facing, so this unit will benefit from fantastic light. So all of this for only £260,000. Next slide, please. Moving on to a 2-bedroom example. So all of our 2 bedrooms are 2-bathroom. Again, floor plan to the left and your view from the balcony of this exact unit, which is overlooking the Western Garden. This unit offers a 4.6% yield at the asking price. In the current rental market, you can most definitely expect to push the rents being achieved once Snow Hill Wharf comes to completion, because there really isn't anything quite like Snow Hill Wharf on offer in the market at present. Market for this unit, you would be aiming at a business professional or couple, likely who have relocated to Birmingham permanently, therefore requiring a bit more space. This would probably more be a mid to long-term rental of 2 to 5 years, and would also appeal to a market of 2 sharers, so possibly a wider market for 2-bedroom units. Next slide, please. As I mentioned, there is a fantastic variety of units, of views, prices and yields. So please get in touch following the presentation to find out more detail. As mentioned, we've got 1 bed starting from only £245,000, 2 bedrooms starting from only £315,000, and we've got some incredible 3-bedroom apartments from only £462,000. We also have Skyline Duplex collection starting from £478,400 if you're looking for something a bit more premium. Units offering yields of up to 5%. As mentioned, completion dates from Q2 of this year, and therefore those units will actually benefit from the stamp duty holiday right the way through to Q4 of next year. The development has a 250-year lease. Service charge of approximately £3.60 per square foot. There is a ground rent of 0.1% of the property purchase price per annum, and reservation fee from as little as £2,000 with a payment plan of 15% on exchange. There's a potential for an additional 5% down payment depending on the completion date of the building in which you're purchasing in. So that 5% additional down payment would be 12 months following exchange, providing obviously the building doesn't complete before that. So thank you so much for listening. I hope you found that interesting, and I will now pass you back over to Widya.
Thank you to all of the presenters. That was indeed insightful. Before we open up for the Q&A session, please allow me to share with you the full service of Benham Reeves. We have been in business for more than 60 years in the UK and have established a name as a leading lettings and management for our Far East-based landlords for several decades. What we would be excited to know is that we can provide you with an end-to-end service through your property investment lifecycle, which includes buying, furnishing, rental management, tax filing, and selling. We also have our own furnishing company called Insight, which you will see in our slide, the next slide. InStyle Direct, which is actually one of London's leading interior design companies. So please do reach out to us should you need our support in any of these services. The next slide will just show you some of the apartments in London, in the UK, that we have dressed for our landlords and homeowners alike. So shall we begin with the Q&A session? I've seen so many questions coming in, so thank you for that. Perhaps the first question, 1 second, okay. So there's a question about whether you'll be allowed to purchase as buy-to-let first and then change it to self-use when you move to the UK. I saw that Marion has given a very, very good response on the mortgage perspective. So perhaps I can just add on a little bit to that. UK is an open market. Anyone can buy a property for buy-to-let or own use. Generally speaking, there is no restrictions. And of course, like I've mentioned, we can help you with that, the rental management part. And when you're ready to move in, we will also prepare your home with our furnishing services. Perhaps, Simon, if you can add on your insights to this question a little bit more with any tax implication at all, should anyone decide to change to own use further down the line. Simon?
Sorry, I just had to open the door. What was the question?
So we had a question on whether someone, whether there's a restriction if someone first buy for buy-to-let and then further down the line, if they decide to move in and use it as own occupation. Is there any tax implication for that? If you can
Not
quickly.
at all. Sorry for not getting that first of all. No, there is no restrictions. A property can be used for a buy-to-let, a main residence, but if you buy it through a company on a buy-to-let basis, enjoying the benefits that I have suggested, and then you convert, the property moves from a buy-to-let to a residential dwelling used for the family or closely connected persons, you get what's called the ATED charge, the annual tax and envelope dwellings. So if it's your intention to enjoy a little bit of rental income for a year or two, and then to enjoy the asset personally, don't buy it through a UK or overseas company. Buy it in joint names or whatever name, whatever. Buy it in the names of a person. Have mortgage finance. Capricorn, as Marion has delivered how you can do that. Make a will for succession and inheritance, and look at life insurance to protect that unfortunate inheritance tax liability in the event of an untimely demise. It's no point buying the property through a company unless you are going to rent it exclusively. Okay. Thank
you, Simon. To lead on to the question on inheritance tax, there's actually a question on the financing part. From an inheritance tax perspective, is it better to have a larger mortgage upfront at the time of purchase of the property, or it wouldn't make any difference? This is assuming it will be purchased under personal name.
Yeah, it is best to have, when you're buying the property or going through that buying process, it is better to take out a mortgage at the first level rather than obtain mortgage finance later down the line, because there are restrictions in how the finance can offset a liability to inheritance tax. So what I'm trying to say is when you're in the process of buying and enjoying that buying journey, try to get mortgage finance from the outset by speaking to Marion and his colleagues rather than refinancing later on. Because if you're refinancing later on, the proceeds of refinance should be used for a similar purpose. So try and get your organize the purchase, whether it's personal names or corporate. Get mortgage finance because the rates are so low anyway, and the bank or institution offering the finance will assess your risk, and they'll have a charge on the property which reduces the risk a little bit. Do everything in one go, have your will, optional life insurance, but yes, get the finance in the purchasing process.
Thank you, Simon. There's also a question by Mr. Lam, who's from Hong Kong. He would like to know how many % of the tax should he pay if he buys for residence, for rental purposes, completing in 2022. I believe he's asking about the stamp duty as a Hong Kong buyer.
It depends on the actual purchase price because there are graduated rates. There are graduated rates of purchase. So if I don't turn to the page, but on page 4, page 5, there is the stamp duty purchase tax, and there's the surcharge if the property is not classified as one's main residence. It's a once-only tax. It depends on the purchase price. There will be no stamp duty holidays if you do it next year, unless the Chancellor is going to be increasingly more generous. I doubt it. But yeah, case by case, suggest we go offline, tell me the purchase price, tell me the use if it's going to be a main residence or buy to let. Of course, commercial property, ladies and gentlemen, a topic for another day. The maximum stamp duty for a non-residential dwelling is 5%. So you can understand there's been a surge of activity in commercial purchases, but this is not what we're going to talk about. This is not what we're talking about today. But happy to take the question and the example offline by an email. You've got all of our contact details, and I'll tell you roughly what the purchase liabilities will be, because they were higher now than they used to be, but at least it's only a once only tax. Careful of the inheritance tax though, because there are ways to reduce, eliminate, and navigate away from that, as explained in my talk when I started.
Thank you, Simon. So moving on to questions on financing that we've come through. I am a BNO holder who intends to buy for own use. How effective is it for me to get a home mortgage when currently based overseas? Marion, please.
Yep, that's a very good question. Now, and there were a couple of other similar questions, so I'll try and explain that because it all kind of fits into one subject. So
thank you, Marion.
Basically, yeah, no problem. So basically, you've got two things you need to decide when buying the property, and that's what are you going to do with it when you receive the keys. Now, if you feel like you want to live in it, that's a residential mortgage to begin with. Whether you, as a buyer, or your immediate family are going to use it, that's a residential mortgage. That's a regulated mortgage. It's all to do with your income at the end of the day, and kind of it's to do with your own personal finances, should I say. Now, that's very important to establish, because that doesn't mean you can't change it later on. It's just to avoid kind of mortgage fraud or misuse of the mortgage products out there. Now, if you're based in Hong Kong at the moment and you've got your full-time job in Hong Kong at the moment, and you feel like, right, I've had enough of Hong Kong, I'm going to London, we need to know exactly what your situation will be there, whether you're moving with work, whether you have another job there, what your income is going to be, because you're saying, right, I'm going to buy a property to live in. And so we need to know how you're going to support the mortgage payments. If, of course, at the moment, let's say you work for, I don't know, KPMG or one of those big companies, they have offices in London. Bank will kind of say, okay, you've got kind of good enough understanding or kind of good enough career to move to London. Then they will generally just base it on your income here, and they'll say, fine, you're still based in Hong Kong, but you're looking to move within the next 6 months. You can prove that, maybe have another job there, or sometimes not even that, but to prove good record of earnings, you can get underwritten based on your kind of, you being still in Hong Kong, which is nice. If, however, you move to the UK, now you are kind of looking at the UK regulation, and it becomes a little bit more difficult, because most of the high street banks will want you to have a minimum address history in the UK of at least a year, and they want you to kind of have some sort of a credit history in the UK. So things like opening a bank or a UK bank account will be very important, sometimes even a credit card, just to build up your credit score. Although that's a bit of a myth, because I've literally, probably about a year ago, no, just before COVID, I had a client come from Hong Kong, worked for KPMG, landed at Heathrow, met me at our offices in Hammersmith in London, and we managed to get him a high street lender, because the guy was just good enough as an income, and he worked at KPMG. He had the offer from KPMG, working at £75,000 per annum, and it was nice and easy, got him all done. But again, that's probably one bank that would, well, not one bank, let's say one or two banks that would do something like this. Most other banks would want you to have been living in the UK to approach them as a UK domiciled client. And of course, being on a visa, that will have some loan to value restrictions and things like that. So to answer your question, both can be doable, whether you do it from here or whether you do it there. I just feel like if you move there, you need to at least be there for a couple of months to even apply for the mortgage and have some sort of a chance. If you do it from here, there's probably one or two banks again that would consider it. Again, they would look at your Hong Kong income. They might take a haircut of your income simply because you might be getting paid in Hong Kong dollars. And obviously currency fluctuation is quite important when banks consider lending. So both things are really doable. It depends on your situation, what's best. So if you want to speak offline, obviously we can go through your situation. I can tell you what the best way forward is. Sorry, one more thing just to add. If you want to buy a buy to let now, rent out the property for a year or so, and you want to move to Birmingham and live in it, or your family lives in it, then that's doable. You just need to refinance, meaning you remortgage with another bank or another residential product. Generally, that's doable. Of course, there is a tie-in period which every bank wants, because a mortgage is a long-term loan. They don't want you to be using it as like a 12-month bridging loan, or some sort of a quick quick turnaround or quick redemption loan. So they will have a penalty if you exit before your initial, I think you saw 5 years. So let's use 5 years as an example. If you lock in for 5 years, there's likely to be a penalty if you sell the property, redeem the loan in full, or change to a residential within the 5 years. Of course, if you tell me that up front and say, Marion, next year, actually, so the property completes this year, next year I want to move to Birmingham, I will pick a product for you which has no redemption penalty, because there are lenders that offer no redemption penalties. However, obviously, as you can imagine, the rate is likely to be slightly higher, because they know that someone can anytime take their business elsewhere. So that's basically my answer to that.
Thank you, Marion. A question for Lucy. Thank you for sharing the prices of the 1 beds and 2 beds. There's a question on how the estimated rental returns for the properties in Snow Hill Wharf.
Yeah, so we have, again, it varies depending on the property price. It's also worth mentioning as well that all of our rental valuations are from lettings companies. So external companies have valued each and every unit, and that is valued in the current market. So we don't try and predict what Snow Hill Wharf might achieve when it completes in a year or so's time. We do it in the current market, so what's being achieved today. And actually, there really isn't anything quite comparable to Snow Hill Wharf in terms of the quality, location, or even facility offering as well. So rest assured, you can be quite confident that you can probably better those rents, as well as obviously just the market improving year on year as well. But we have units offering up to 5% yields at the asking price. Again, as I said, it varies between each and every unit. If you are purely yield driven, I would possibly recommend looking at units on lower floors. You're not going to drive a huge amount difference between the different floor levels, but obviously as you get higher up in the building, particularly onto those top few floors of the image that we're looking at here, you are going to expect a higher capital value, and therefore the yield will decrease. However, from a capital appreciation point of view, so if you're looking mid to long term, those units are going to appreciate much more in value because they offer some unrivaled views, panoramic views of the city. So it really just depends where the investment sits. If you're looking for short-term yield gain, or more mid to long-term yield gain, but also capital appreciation. But happy to pick it up on a case by case, each unit individually after this presentation.
Thank you, Lucy. Quick one. What about the management fee? Is this paid by tenant or owner if it's buy to let?
Yeah, it's a good question. So it is paid by the owner. However, for example, £3, average £3.60 per square foot per annum, and that includes all of the facilities, even down to window cleaning, maintenance of the gardens, etc. So sort of a stress-free investment. You know everything's going to be looked after. Whilst it's paid for by the owner, you can expect to reap some of that back within the rent that you're charging. So because of all of those facilities on offer, you will be able to charge a higher rent. So for example, I live in the city centre. The development I live in doesn't have any facilities other than a concierge. I'm a member of a gym, and I pay about £70 a month to be a member of that gym. So, you know, that alone, you can expect to charge that on top of any other development which isn't offering those facilities. So you can hope to reap it back through the rental charge, but it is the responsibility of the owner to pay the management charge.
Thank you, Lucy. I'm conscious of time because we have gone past the hour, but there's one question that came in which I felt was really interesting. To Lucy, how is your pricing compared to other new builds in Birmingham? Are there other pipelines of new builds, and what are the indicative prices for future launches?
Yeah, it's a good question. Yeah, it's a very good question. So as I've mentioned throughout my presentation, Snow Hill Wharf is leading the way in terms of quality, facility offering, even location. Like every other Berkeley operating company, we're proud to be market leaders. So we're delivering something yet to be delivered in Birmingham, best in class. So on a purely capital value price per square foot, we may look the strongest when compared to other developments in the city. However, when you break it down to what is actually being offered, and you know, even compared to some of our outer London schemes, it actually looks really good value for money. You can also expect to achieve much better rents because of the quality, because of the facility offering, and expect the Snow Hill Wharf to hold its value and appreciate in value much better than some of the other developments that aren't necessarily built to the best quality or have the same facility offering. In terms of future developments, so St Joseph has got a long-standing commitment to Birmingham and the wider West Midlands. So we've got a really exciting pipeline of future developments as well. Our next development called Glasswater Locks, it is on our website. That is another city centre scheme, so apartment-led scheme. It's hard to indicate prices, but you can guarantee it will be stronger than what we're launching Snow Hill Wharf at, purely because of what it's doing. It's not to say that it's any better in terms of quality or facility offering. If anything, it will be matched. But yes, definitely, you know, when we look to launch in a year or so's time, the market is moving that quickly that you can definitely expect it to be pushing on the prices and price per square foot. Hopefully that answers your question.
Great, that was a great response. With that, I think we can conclude the webinar. Thank you to all the presenters and attendees that have stayed throughout till the very end. Just to share with you that we are open for private consultation this week in Hong Kong. So please scan the QR code to register your private session with us this week. And if you have follow-up questions for Marion, Simon, or Lucy, please do email us at webinar@benhams.com or phone us at 2537-5443, and we will gladly follow up privately with each and every one of you. So with that, thank you so much once again, and I wish you a very good week ahead. Thank you.
Thank you.
Bye. All the best. Bye. Bye-bye all.